You do know what they say, right? Never ever short a dull market. Please don't do that. So hopefully you've been staying away from those Great Depression trendline doomers and just trading the chart for what it is. It's an uptrend. We'll do exactly that today with respect to the Google and Tesla earnings from after the close. The most interesting thing there is really the massive capex announcement from Google. It's moving the semiconductor names more than Google itself. And therefore, the usual suspects, NVIDIA, AMD, Broadcom, they'll all be top priorities for tomorrow. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 5 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight on the SPY daily time frame chart. Let's just begin with a very simple question. What is the overall trend? Now, it's a little bit of a rhetorical question. Of course, this is a brand new all-time high. It's the highest high in the trend count. So of course the trend remains in the upward direction. That's bullish. We did find a little bit of a higher low here on the Tuesday session, but let's get pretty granular about this analysis. We know that we had a breakout attempt on Tuesday of last week from the balance range here, and it was a pretty unsuccessful attempt for a number of reasons, really 2 main ones. Number 1, the candle on the daily simply closed underneath the top end of the balance at 626.65. That's strike 1. Strike 2 is that there was no attempt intraday whatsoever at a meaningful gap fill reversal over the Monday high. That's strike 2. Buyers did not step up and do what they should have done to offer the next higher low in the sequence. So we sort of fast forward a little bit. Of course, Thursday of last week, it starts to look more like a successful breakout attempt. We have a daily candle that closes above. Friday starts to hold a higher low over the top end of the balance range. It was a poor reference point, and we talked about that on Saturday, but lo and behold, Monday, we spend the close up above the level. Tuesday, we repair that poor and weak reference point, and on today's session, we actually offer a picture-perfect gap fill reversal over the Tuesday high. So as we think about this sequentially, let's just ask this from the perspective of, are buyers doing their job? The answer is absolutely. And if you're trying to short this because of some yearly resistance trend line, I would really encourage you to have second thoughts about that thought process. So what do we do about this chart going forward? Obviously, buyers are in control. This is a brand new all-time high. Do we just short it looking for a pullback? Probably not. The base case here is continuation into blue sky territories. We could use the upper edge of the weekly expected move as a reference point, but it's really just that. I would not second mortgage the house trying to find a short here. I wouldn't say, oh my God, it's impossible for the market to even think about moving beyond that. It's just a reference point, right, from the options market in particular. So if we go beyond it, it's really blue sky territories, whole and half dollars, any intraday levels that form. The other thing we can do here is use a Fibonacci extension and look at this through the lens of a bull flag to the low pullback of Tuesday from last week. And you can see here that the measured move of the bull flag is closer to about 641.50s. So if you did want to have some sort of target up there, you could hypothetically use that, but once again, this is a reference point. I would not second mortgage the house saying that the market needs to make it all the way there. If we get there and the market starts to reject, okay, we have a little bit of confluence, but I would not do anything that requires movement towards 641.50s. The classic example that we use is the 0 DTE SPX traders, right? So if you're trading 0 DTE options, I would not buy 0 DTE 641 calls with the expectation that we're going here simply because it's a bull flag measured move, right? That's the simplest form of this. Let's take that off the chart and let's talk about possible pullbacks. In a picture perfect world, now we would start to actually offer a higher low over the Monday high, and we'll see why on the hourly chart in just a second. That would be the best case scenario. Maybe a little bit of an inside bar here on Thursday, then a breakout candle on Friday. Pure speculation. There's nothing saying that it needs to take place that way, but I would really enjoy trading it that way. If we do see a little bit of a deeper pullback underneath the Monday high, I would really just start to look for, can we support again up and over that 626.65. As long as we're above that level, there's really no issues with the daily trend. We're well above the daily 20 SMA, and the market's really trying to just build out a new block in the upward direction. So this might then invite the question, where would we change our tone to becoming more bearish? Well, it's probably underneath that Tuesday low, right? If we stop holding on to the top end of the balance range that we've just broken out of, I would tend to think that this comes into question here. Is it possible that you have a lot of trapped overhead supply who got involved on today's reversal, on Tuesday's reversal? It's very likely. So some kind of lower high back in the balance range, probably at minimum, targets the bottom end of balance here, and then we'll reevaluate, right? Because let's not forget from the Saturday update video, it's still very possible that the weekly chart can yield some sort of a higher low up and over this 604.75. Now, we're not going to go to the weekly chart directly, but you can kind of envision, right, how if we hold up over this level on a weekly, it's still an uptrend like that, right? So that's the base case on the daily timescale. Once again, buyers are firmly in control based on everything we walked through relative to the breakout attempt and comparing it to what had happened on Tuesday of last week. Let's take a look at the hourly timescale and let's get a little bit more granular. You can really start to see how that Monday high is such an obvious place for the market to pull back and potentially offer a higher low. Once again, the market does not need to pull back. The market doesn't need to do anything. But if it does pull back, and if we can spot buyers showing up here for a potential higher low, isn't that beautiful, right? We have lows, we have higher lows over the structure. Can we offer some kind of higher low here over the structure from Monday? That would be picture perfect. So 631.50 becomes a top priority for me in the short time frames as we head towards the end of the week. When I say short time frames, I'm talking about hourly, I'm talking about intraday, 15-minute, 5-minute, 2-minute. I'm not talking about shorting the market, right? What else can we do here? If the market were to come in underneath that, I mean, maybe we could trade some pullback shorts as intraday scalps only for risk reward, but only if it's a no-brainer and only if the market internals really support and suggest that at the exchange level, sellers are stepping up. So you'd want to see blood red market internals if this is even going to be a consideration. Otherwise, you're really just fighting the trend. And honestly, this market has been a pullback buyer's market. It really hasn't been a shorts market by any stretch of the imagination, right? So is it reasonable that maybe if we drop this, we support here? It's possible. I would look to get involved with a much more confident stance here, back over 631.50, undoubtedly. That would be Monday's high. It's also the opening print from today's session, a very, very nuanced open via the gap up on today's 9:30 bell. So with that, we can throw on a couple of our key sort of metrics and come in with our Fibonacci's and see where this 38.2 takes us. It's still over the top end of the major daily balance range. So I think it's reinforcing the idea that on the daily time scale, even if this were to take place, kind of A-okay from a pullback perspective. If we come in from this low up to the most recent high, I love how the Fib 38.2 is perfect confluence with that 631.50. Let's come in here with our intraday anchored VWAP set and see where this is at. And by the way, there's a couple of updated reference points. These two remain the same prior to the ceasefire, after the ceasefire. This is the beginning day of the balance session in here, and this is the Friday gap up from last week. So as you can see, we're above the entirety of the stack, and if the market were to pull back, it is possible that arbitrarily somewhere in here, the anchored VWAP could offer confluence of support, which is another reason why I would not really be aggressive on the short side. If you have this anchored VWAP here, and it is going to be kind of between levels, it really does not become an attractive short, right? And we could even play this out in terms of what should have happened if sellers were going to step up based on today's gap up. If this was going to turn into a double top, something along these lines, obviously, sellers needed to do the first critical step, which would have been battling for price acceptance back down inside of Tuesday's range. Instead of offering a gap fill reversal over Tuesday's range, sellers should have fought really hard, tooth and nail, to get acceptance here, and then maybe tomorrow there could have been some potential for a neckline breakdown that looks like this. And remember, hypothetically, we're talking about if the market ended up looking like that, maybe tomorrow we would have had this as a follow-up attempt. It's simply not, it's not even a talking point. I don't know why I'm wasting my breath on it, right? No, in all seriousness, it's helpful to know what could have happened, and therefore you can prepare against those base cases, right? So base case tomorrow, once again, pulls back, offers a higher low here. Great, we get involved. If it is just some sort of continuation move in the upward direction, they tend to be fairly difficult to trade, but at bare minimum, it's likely not a short. And I think that's the big thing that I would want folks to take away from this. It's at bare minimum, not a random short because, oh God, the market can't possibly go any higher. It's a terrible, terrible reason to try to take a short. You need some sort of logic, you need some sort of reference, and you just don't have that there in blue sky territories. Let's take a look at the market internals. If you're not familiar with the market internals, check out the video tutorial in the top right-hand corner. What do we see here? In terms of volume flows, very substantial on the Tuesday and today's Wednesday session. This is beautiful because Tuesday, once again, repairs that poor low reference point, cleans up the structure, and then the market makes an advance. So really strong volume flows there support the idea that new money buyers are getting involved in this breakout. If you look at the advanced decline line, it's not in trend higher zone, but it's pretty stable at an elevated 1,000 read for both the Tuesday and today's Wednesday session. You'll notice here that the index score is actually red for a majority of those sessions, because on these days, we actually spent a majority of the session under the opening print. So these recovery efforts into the afternoon are actually that much more impressive when the index score is technically red, right? Because hypothetically, that means out of the 30 data points, a majority of them, or enough of a majority, are skewing the print red, but yet the market was still able to recover. That's got to tell you something about relative strength, right? Now, over here, the cumulative builds on the tick, they're kind of lackluster. And I have to give a little bit of, I don't know if I would call it credit where credit is due. It's not like the sellers are doing much on the tick level, but you're not getting huge follow through at the exchange level. I'm a little bit not, what would the term be? I don't know how much weight we should put into this. What this typically would indicate is like, okay, breadth must be really poor. But as we'll see when we get to the breadth segment of today's video, breadth actually saw an uptick today. Really strong and like meaningful uptick. So I'm not inclined to say that about the tick analysis here. Let's jump on over to the market profile and see if we can learn anything from this perspective. Look at that poor high from the Monday session. That's been repaired as of today's close. The next thing that really becomes influential here is the spike from today's close. You can see M period here sticks up about 3 or 4 TPOs. It's probably much more than that if I zoom in. But the point is that the market only sort of produced this spike and then closed. We don't know if these prices are fair, so spike rules will be in force for tomorrow's session. Spike rules, what are those, you might say? Well, spike rules tell us if we open over the spike, that's as bullish as it gets. It means that the auction is incomplete to the upside. We should look for follow through higher, right? And this is price discovery into blue sky territories as well. We'll probably have to use an overnight high reference point if that becomes an interesting trade. If we open in the spike, which is somewhere in this M period move right here, then ultimately we learn something when we brigade bolt out of range, or if we brigade bolt back under the spike base, then we would say, okay, this is a little bit of a failed attempt to auction higher, a failed attempt to discover and accept higher prices. Now, the most bearish outcome would be if we actually open underneath the base of the spike to begin with. So not inside and then falling out, but rather just opening below. Then we would have trapped buyers who sort of caused the spike into the end of day from today's session anyways. And that would be underneath, if you want a technical level, at 63.9475 on the ES futures. If we end up opening below that level, I would be mindful of some sort of pullback to get into what's the reference point, right? The reference point is here. It is the Monday high, which happens to be, it's just mechanical in nature because of the way that the overnight high went right to it in this morning session. So 63.75. 63.75 is in play if we open underneath the base of the spike at 63.9475. If you want the S&P 500 Spiders cash equivalent of that spike, let's go take a look over there right now. Let's head on back and let's take a peek. That would be underneath 633.60. If you open underneath 633.60, that is where your spike rules start to suggest the pullback here. 631.50 becomes a target in play. Again, I really wouldn't opt for the short to get there. I would, as you guys know, look for the long. This has been a pullback buyer's market, and that is the next level, 631.50, Monday's nuanced high, and the overnight high, today's opening print as well. Okay, if we're underneath that, maybe a little bit more caution, right, on the long side, but certainly getting back above. Count me in, coach. I want longs here, and we're targeting the all-time high. Okay, 2-to-1, beautiful. Let's continue along. Let's take a look at the NASDAQ. Let's reset this. Let's go on over to the NASDAQ QQQ. There's a little bit of a divergence taking place. Now, you got to be careful about what you call the divergence because the success of the breakout attempt on Tuesday of last week wasn't really all the way there, especially with the close back in range. Obviously, on Wednesday, you had the follow-up to the bottom end of the range again, but you've already seen a more meaningful break to the upside. Right? Tuesday's attempted break was not just like we opened here and then fell into range, then we had an inside day, and then we went on Thursday. No, it's already broken out here on the NASDAQ. So am I inclined to say that the divergence is so powerful where, oh my goodness, we need to short the S&P into the ground? No, as a matter of fact, I think it's more the S&P 500 playing catch up to the NASDAQ than it is the NASDAQ needs to break out of this and make a new high to catch up to the S&P. You see the order of the way that, what does the dog wag the tail or does the tail wag the dog? It's the same thing. So in the QQQ, in terms of the daily trend, let's keep it simple in terms of the things we're looking at. We're still absolutely in an uptrend. Even though the market has not produced a new all-time high today, we are pulling back from the highest high in the trend count. I would really consider this much more of a new possible area of balance after this balance breakout in here. And it seems very reasonable that if the trend is going to continue, especially after these longer lower wicks, any sort of brigade bolts up and into blue sky territories targets the not the all-time high, the upper edge of the weekly expected move, 569.54. And then we could take the same approach with a Fibonacci measured move of this as a bull flag. Let's just start with this one. That would give us almost actually perfect confluence up there towards about 570.30s. So that seems like a reasonable target into the end of the week, something right along these lines in here. If you did want to come in, and this is probably more relevant from the hourly chart, so let's actually go there now. If you're going to consider this, kind of like bull flag consolidation here, then let's just throw a fib extension on this. Oops, we got to switch tools on the hourly. That's on me. Let's come in from the low. Let's come into the high. Let's come into this low. And what is the extension here? We're looking at about 573.25. So I would really argue for 570 and 573.25. Those two levels would be your measured moves. Now, once again, these are simple reference points. They're not do or die levels for the market because it's price discovery. We have to determine what happens real time with the auction at those levels. If we take a look at the intraday hourly, just in terms of staying on top of the analysis and what's going on here, the hourly trend still remains in the upward direction. And as a matter of fact, because we have more reference points that are closer in the NASDAQ, it might be easier to find trades in the NASDAQ. If we think of this through the lens of double bottom, then any pullbacks over the neckline as a higher low on the hourly over 562 probably yields what? An attempt at the all-time high. This is a very poor high, and this is also unrepaired. Notice that, obviously on the ES futures and the S&P 500, we broke through Monday's high. We did not do that here in the QQQ. So noting the structure here, and we'll see this on the market profile, very poor high. The structure needs repair. It's the improper end of the auction. We would expect excess at the auction high, not some sort of whimpery little like everybody just kind of like agreed and said, all right, I guess that's enough for today, and maybe we'll try again later. This was not a euphoric bang where it's the end of an auction. Think of a car auction. Two people are going back and forth, back and forth, back and forth. It gets crazy, way parabolic numbers. Someone throws in the towel. That's the end of the auction. That is not at all what this action right here represents, right? So if that needs to be repaired, that would be sort of calling for a new all-time high in the NASDAQ. It doesn't have to be sooner rather than later, but if we're at least trading up here, I would think that the trend is aligned with continuation into blue sky territory. Let's come in with some Fibonacci retracements. We talked about extensions, but let's look at retracements from here to here. Looks like we're holding up over the Fib 38.2, which would just reinforce that your key level here, your key zone really, is between 560.25 and 559.50. If the market were to pull back, I wouldn't like it there because now you start to have a little bit of a threat of a lower high here. Does it maybe start to suggest a little bit of like, could you go Man Ray pattern here, shorts back to the downside? It's possible. I would still be very hesitant on the short side, but the lower high from here to here undoubtedly should be recognized. I wouldn't love the NASDAQ trading back here, but first thought is it has to be supportive first, and if we break, then we change our tone, right? That's the key difference. If we break, then we change our tone, right? It's not like, okay, let's just load up shorts here and let's pray. Let's hope it breaks. That's not how it works. You have to break and then offer the lower high to truly put these traders off sides. Think of it from this perspective. If anybody's long from in here and you're trying to load up shorts, it's you against them, right? And I would say them, the market participants, are clearly leaning into the bull side. They have no reason to panic if we're here. You want those longs to get panicked. You want them to be biting their nails. You want them to be thinking, ooh, should I stop out of this position? Am I going to get hurt here? Am I going to take a loss? That's when you get this nice downside move. You don't want to just preemptively be shorting it in here. So anyways, I hope that's maybe a little helpful. Let's jump into our anchored view apps intraday. You can see we've reclaimed this Friday anchored view app, which is pretty meaningful. I like the fact that it's pretty much confluence right now with that 562. If we could stay above, I do still think that the target overhead is the all-time high, 566. If we start to drop it to the downside, again, there might be a small short, tiny scalp, not overstaying your welcome on a lower high under 560.25 into 557. But even at 557, I would be sort of thinking about the opportunity more so. Daily 20 SMA might catch up over the span of getting into the end of the week. Is it possible that a daily higher low, a DHL shipment shows up at 557s? I think so, right? Anchored view app in here as well. That's, of course, from the beginning of this balance range back here. I'd be much more inclined, and I still maintain this stance. You can hear it in my voice, I'm sure. This is a pullback buyer's market. This is not a, hey, let's try to get cute and fancy with it and short the market just for the sake of shorting it. It has not worked once, right? Opening drive to the downside, maybe. But aside from that, it was much more about identifying the Friday repair of the low, then follow through higher into the sort of middle stages of this week. With that, let's continue along to the NASDAQ side of the market internals and see what's going on from this perspective. We could see here strong volume inflows, both on today's session, decent flows on Tuesday, Monday, a little bit better than what we saw in the S&P. We did close in trend higher zone, cumulative builds, decent over here on the NASDAQ side. Really no red flags to speak of. If we jump on over to the market profile, it should be abundantly clear, this poor high. Yeah, look at this thing from Monday. Flat right across the top, CH and I periods improper end of the auction. If it needs to be repaired, we're looking for that to get tagged. Notice here that the overnight session is already trading up near it, hasn't quite broken out above. One thing I would encourage you to carry forward, and we've been doing this as we're trading near all-time highs, right, is that the overnight should not set an all-time high that sticks. The regular trading hour session is what should set the true all-time high on an excess high. If the market's going to come in hard and back off and do something aggressive, if you're carrying forward, like let's play devil's advocate, right? Let's say the overnight makes an all-time high here in the overnight session. Tomorrow morning we open here inside of Monday's range, and then we back off. We would need to carry forward that the overnight all-time high is unsecure, and we would expect that to get tested and broken at some point in the future. Okay, that's the point of what I'm trying to get at. We do not have a spike on the M period from market profile in the NASDAQ. You can see that value was much more overlapping in terms of upside, the gap fill reversal on the S&P. You didn't even have a gap in the NASDAQ in the first place. But notice that you did end up closing up and over and into the A period single prints of the Tuesday session. To me, it's a slightly more meaningful move. I would want to see tomorrow, and it seems likely given what's happening through the overnight, I would want to see value really develop over value area high from Tuesday. Right? Not as interested in the Wednesday, but as long as we're over the single print base, you could even say something around like 23,260s. If you could get value to develop on Thursday over this level, it's an advance in the upward direction that would be bullish all up for the market. It would continue to sort of support the idea that we should at least be repairing this, if not going on to trade blue sky territories on some sort of price discovery move. With that, let's jump back over to the platform. Let's reset it one more time on the dailies. Let's take a look at everybody's, some people's favorite, my least favorite, the Rusty Russell. What's going on with the Russell? Really sloppy balance range in here. There's a couple of ways you could draw it. This was really the preferential way. Breakout failed, look above and fail, right? This was looking like another look above and fail, but the look above and fail has failed. That's a lot to keep track of. What do we mean by that? Well, you could see that today. Sellers were unable to keep prices inside of the Tuesday range. They were unable to keep prices underneath 223.25. And as of right now, the daily close being over the opening print from Friday of last week is pretty compelling as well. So if this is a true, let's just call this, let's try it one more time. If this is the new balance range, hashtag sponsored, then what we're looking for is continuation. Now that we have a daily close up and over 225.25 and a pretty decent looking gap fill reversal over the prior day's high, buyers are in control here. If we're looking left for potential targets to the upside, I would just call out that we are trading through a pretty sloppy zone here, but the top end of this range is the target around 230. If we can get up towards 230, that would continue to act just as a massive tailwind, bullish in terms of tailwind, for the S&P 500. Now, if the Russell fails this and just stays in the range, I wouldn't necessarily be bearish, and the reason for that really still stems from the weekly chart. If I look at the weekly, I'm very hard pressed to be a bear if we're over this level. Remember the neckline of this head and shoulders from back here? I really don't like the idea of trying to be a bear in here until we drop that on the weekly, if there's going to be more detrimental downside. Okay, so that's your higher time frame view of the Russell. We could maybe take it down to the hourly and see what's happening from this point of view. Once again, look at this nice intraday hourly higher low hold over the opening print from Friday of last week. That's kind of the nail in the coffin, in my view, for the sellers, right? Because number one, you could see the thrust lower to close the gap. Sellers then maybe could have said, okay, let's lower high at here. Let's keep things kind of contained in this range, in terms of range, this rectangle. And then maybe we come back down to do something like this, and the range just persists. So this is the nail in the coffin, as we've said, and as long as we're over that 225.25, buyers are kind of in control from that view. Let's load up the study set with the intraday anchored view apps coming from this beginning of the range back here. You're over the entirety of the stack. Nothing really bearish to say about it from that perspective. If we take out the Fibonacci retracements from the low up to the new high, Fib 38.2, 223.25 continues to play nicely from the daily perspective. Hourly gets a little rough because you then have the threat of this lower high. I would think as of right now, given what we've just talked about in terms of the actual price action, be a little bit more partial to the upside, staying over 225.25. Let's continue along to the Russell side of the market internals and see what's going on from this view. Really strong volume inflows today. Obviously, the tariff resolution on the EU deal at 15%, a little bit better than folks were likely expecting. So, I think that that's a boon for small caps for sure. Decent in terms of the advanced decline line, as are the cumulative builds out of the tick. And if we jump over to the Rusty Russell futures, what do we see on the market profile? We did clean up a lot of structure. This was a poor high, as was this. This is lack of material excess. So the fact that we've moved through that right now sort of repairs it. I would say some people might argue that we need to actually come back and trade that level. I'd say the gap up and getting very close It's very close to a repair. And once again, trading through this was more meaningful Monday's high. M period spike, just like what we have on the ES. The NQ is the outlier here when it comes to spike rules. Take the same approach as what we talked about with the ES, right? If we open over the spike, we should auction higher. If we open in the spike, we wait for a Brigade bolt out of the spike here or under the spike here. If we open under the spike in the first place, which is currently where we're at, keep in mind, this is 2289.80. Spike base is at 2291.80. So we're about 2 points underneath there. If we end up opening below, technically these buyers are trapped. And notice that the point of control is slammed at the top end of the profile. That would indicate that a lot of buyers, a lot of volume transacted here, the most on the session at any given price point transacted right up there. So if they're going to get hurt, right, those longs late to the party are going to get hurt. Opens below don't really look that great on the small cap side of the house. If you want the Russell IWM level, that would be underneath 226.20. Under 226.20 gets a little bit dangerous for those longs up at the high of day. With that, let's jump back on over to our good friend, the Spiders Cash ETF, and we will take a look through our sector performance. Who was leading, who was losing, and where was the weight? You can see that the leader for the session, the week, is at 3.31%. That's healthcare. We then have real estate following it up, 1.89%, followed by discretionary, 1.63%. I would say it's not the most risk-on view. In terms of performance today, I think this is what we should probably care most about. Let's filter by today's performance in just a second. Let's start and finish the start of the sector watch. Get it together. Finish the start of the sector watch by finishing up with the bottom of the barrel. We have semiconductors, the laggard of the week, down 1.4%, followed by the tech sector, down about 34 basis points, and then the bond, right? The long bond is non-issue there. But what I do want to do, just to be very clear here, is take a look at what outperformed the S&P as we went to break the new all-time highs. That's what matters. Let's take a look. Energy outperforms. All right, that's a lighter weight sector. We don't really love that. Industrials, not bad, heavier-ish weight. It's not necessarily defensive or aggressive risk on. Healthcare, heavy-ish weight, fifth heaviest weight sector. It is defensive though. Then we get communications, then we get financials, then we get semiconductors. So as this move is taking place in the upward direction, it's rotational, but it's still being led by some of the heavier weight risk-on sectors, which to me is bullish, supporting the idea that new money buyers are still risk-on in terms of mentality for this market. At the bottom end of the barrel, it's utilities getting smashed from the open, down 1.63%, gapping up into blue sky territories, which is important, right? Because if utilities gapped and went, gap and go, and S&P made a move higher here and SMH underperformed, red flag on the play, short this thing into the ground, no good. Divergence, right? Do not trust the highest high. But that's not the case. Utilities actually backed off hard today. You can see materials, the lightest weight sector, backing off. It's just slightly red there. And the TLT long bond not outperforming either, just would not indicate a flight to safety. So that posture aspect is really important to me. Looks good in terms of the bulls remaining in control. Energy, nothing to talk about, midpoint of the range. Let's breeze through this stuff. Industrials, gap and go, new all-time high. It's bullish. Gap fill reversals keep me bullish. Continuation keeps me bullish. Nothing here in terms of a trend change till we're underneath 148.25. Looking at healthcare, a little bit of a gap up. It certainly helped the S&P side of the house today versus that NASDAQ, of course. So as this moves higher, bullish pressure for the market, but nothing to really do until we're here. So helpful, but not the end of the world. Communications back up at the all-time high after setting a higher low here. Looks good. Google earnings will, of course, play a role in this for tomorrow's open. We'll take a look at Google's earnings in just a second. Let's move into financials. Looks great. Nice higher low here, curling off the daily 20 back up to the all-time high. Really nothing bearish to say about that. Nice, not gap fill reversal because it's overshot it a little bit, but nice hold nonetheless of the prior all-time high at 52.60s. Looks good. Semiconductors, are we breaking down? It's underperforming on the week, but how about just a cool off? How about just literally what we just talked about in the S&P, right? Building a building block in the upward direction. How about the daily 20 catching up to price? How many times have we seen this before, right? Sideways, let the 20 catch up. Sideways, let the 20 catch up. Sideways, let the 20 catch up. I mean, if history is going to repeat itself, which markets do tend to move, they rhyme with history. Are we going to get a breakout in the upward direction? I'm not going to sit here and guarantee it, but so far the trend is in the upward direction. It's a great spot for a higher low. Buyers are stepping up in that lower wick. We have a daily hammer. I don't know, put the pieces of the puzzle together. I would be fairly optimistic about continuation in the upward direction. We talked spiders. Let's talk XLK. Same concept. Why, do I need to repeat myself, right? Look at this. building structure in the upward direction. Inside candle, if we could break the inside highs and move into blue sky territories, that's really bullish for the S&P. I'll be watching that closely tomorrow. If we look at discretionary, this is awesome. Just continuing to curl off the 20, off the top end of the balance range here. Break, Brigade, bolt, continuation. Looks good. You might run into a little bit of struggle here on XLY with Tesla earnings a little bit soft, honestly. I don't think that there was enough optimism around Robotaxi as well as Optimus. We'll talk about it momentarily, but if this is going to struggle in here, it's a reasonable place. I would still be open-minded to a higher low. Even if XLY cools off, it's not bearish, right? There's plenty of room for a higher low. Real estate, breaking out to the upside, upward pressures, upward pressure. It's not a heavyweight sector, but don't get me wrong, it's helping the upside momentum. XLP towards the midpoint of the range again. Not much to talk about here until it gets out of the range. We'll move on. If we look at utilities, this is what I was talking about earlier. Gap up to blue sky territories, faded hard all day. If this went gap and go, had a solid green bodied bar, and let's just say that the SMH, let's play devil's advocate, right? Let's say the SMH broke the daily 20, had a daily candle that looked like this, okay? And the S&P closed the exact way it did at the all-time high, I would be screaming about red flags. Oh my goodness, divergence. You would see it in the title of the video. It would be in the thumbnail. I'd be screaming from the mountaintops. But we don't have that. If we look at the XLU, it's a solid red-bodied bar, fades back into the previous day's session. Could it pull back all the way to the previous all-time high and be fine? Absolutely. We don't want the XLU to fall off of a cliff. We don't want it moving to zero. But it should not be leading the S&P 500 to brand new all-time highs on sustained intraday strength, and it didn't. So no red flag. Let's continue along to the XLB. No issues here. Maybe a little bit of double top action with the inverted hammer on today's session. It's at a similar location to this one. Let's take a look at the XHB in terms of just the cyclical side of the economy. It looks much better. Daily candle in here is much more compelling for more upside, actually. So looks good. I don't really see any issues from that perspective. Even if the XLB pulls back, higher low off the daily 20, fine. TLT, nothing to really do here. I'd be interested in maybe next ideas next week, literally next Wednesday for Powell's speech. That is on July 30th. Of course, we will stream that live. We'll be live at 1:45 on July 30th to take a look at the FOMC rate decision and, of course, the press conference and deciphering any of the commentary from Powell if he wants to offer us any nuggets of how he's feeling about the tension, so to speak, that's taking place right now. Let's jump into our ratio grids. Let's see what's going on over here. If you're not familiar with the ratio grid, check out the video tutorial in the top right-hand corner. What does it all mean? What is it telling us? Bullish, risk on here. Decent improvement, probably takes a hit tomorrow via Tesla earnings. I would love to see this curl higher. The price action itself on the structural chart is amazing. The relative strength, though, not really there. Communications, little lackluster. So this is the glue. This is still the glue over here. This is not screaming for risk off, neither is this. If we take a look at some specialized ratios, we could see the same thing. Still the glue, still the glue, still the glue. Could be a little bit better. That's because of the XLV outperformance today on the gap and go. This still looks fantastic. This still looks fantastic. We've dropped this back down to the 1,000. Russell 1,000 growth, Russell 1,000 value instead of 2,000. And all it's done is sort of take off that blip where I could have swore there was some rebalancing, maybe not. Either way, still risk on is the perceived sentiment from the market based purely on performance and these charts. If we look at risk on off B set, you can see a mild downtick on the gold ratio. That's bullish for risk appetite. You can see a mild downtick here, sustained just overall downtrend on the TLT ratio. It's bullish for risk appetite. And I do want to go full screen on the Bitcoin chart because there's a couple things I want to talk about on the daily really quickly. So ignore the Sailor shift that's designed for the weekly, but look at this balance range up here. Even if Bitcoin were to pull back, and oh my God, everybody starts bashing Bitcoin online. It was a fake breakout. You suckers got involved at the all-time high. Where's there the potential for a higher low? Right here at 112,275. So if Bitcoin pulls back and holds this, I would be willing to add to the swing position I have on right now, looking for continuation in the upward direction. Lows, higher lows. Previous resistance acts as newfound support, and we're still targeting on the swing at least up towards this 140. Okay, so Bitcoin looks good to me. I would say that this balance range is bullish, and just like we said in the intro, don't short a dull market. This morning was dull as it was sort of figuring out the sideways action over the previous day's high in the S&P 500, but that's not a short, right? That's still a long in an overall uptrend for a higher low. Anyhow, that's the B set for the risk on off. Let's take a look at the dollar and interest rates here. What do we have? A little bit of a rollover in the dollar, which is kind of interesting because there was the possibility of a trend change here over 97.75, maybe some kind of look for an inverted head and shoulders. Didn't play out, and obviously that is helpful for U.S. equities. A lower dollar obviously sort of dilutes the way that you want to price your stock anyhow. You could think inflation. Let's take a look at the TNX sideways in the midpoint of the range. Nothing to really talk about there until the Fed. Let's move on into our inverted ZT. Speaking of the Fed, really nothing to say about this either. It's kind of just flat and sideways. So let's just go straight to the source. What does the Fed tracker tool have for us this afternoon? We've got ourselves a 95.3% odds of a pause. There's really no change there. And remember that the big thing we're watching is whether or not we get 1 and 2 cuts into the end of the year or just 1. There was Bessent on the mic, some sort of press conference, some public speaking engagement where he basically said he speaks with Powell fairly regularly. I think the quote was that they have breakfast at least once a week. He said between 1 and 2 cuts seems very reasonable. That's from Bessent. So we shall see. Anyhow, that is the Fed tracker tool. Let's take a look at the earnings calendar. It's been a very quiet week. Tomorrow morning, we do get some interesting shakeup here with the jobless claims. The initial and continuing are always interesting to watch out for. Then the manufacturing and services PMI at the 9:45 timeframe. So this will be a top watch. The flash from S&P is always the more important one. The revised final is not as important, but when the final comes out, typically it's aligned with the ISM survey report anyhow. So the ISM usually parses out the data a little bit better, tends to be a little bit more responsive for the market. That's it. That's all we have into the end of this week. And obviously next week is loaded with Jerome Powell on Wednesday and the full Monty labor report. Pretty busy in terms of all of these things happening at once. There is your calendar for next week. It's going to be a busy one. Sort of excited, get the market maybe moving a little bit better. Some of these intraday moves have been a little lackluster. It's like hit or miss on the market these days. Let's talk earnings calendar. You can see here, GE Vernova smashed it out of the park. Big gap up. Really thrilled to be long that stock for the nuclear theme. After the close today, it's all about Tesla and Google. Tesla, a little disappointing on the numbers, but that was to be expected. If you open this up, you can see here, miss on the auto revenue for a second straight quarter. Everybody knew this with the delivery numbers sort of being down, but one thing that they didn't really talk much about was Optimus and how robotaxi is going. So you could scroll through this report. It's really less about the numbers and more about the forward-looking statements. They talk a little bit about robotaxi in here, and it is still nice to see the FSD miles improving there. But Optimus was sort of a letdown. I think that they were talking about within 5 years trying to make, 100,000 Optimuses in 5 years per month, if that makes sense. So total annual Optimus output would be about 1 million robots in 5 years from now in 2030, right? So we'll see if they hit that target. Elon's always been a little hit and miss with his forecast there. I don't think the market really bought the whole premise of that, and we'll see that reflected in the stock price. It's lower slightly on earnings, so that's kind of okay there. I'm just glad that implied volatility is likely to come down on the stock tomorrow for the options to start becoming tradable again. And then the other one, of course, was Google, aka Alphabet, and what we care about over on Alphabet is I was pretty interested in the search revenue breakdown. Looks like search continues to just kind of be the core chunk of the revenue, and cloud services is up slightly. This is the larger deal, though. The company increased capital expenditures forecast to $85 billion, up from $10 billion in February, and that's really what's moving the NVIDIAs of the world, the Broadcom, the AMDs of the world. All the semiconductors are really starting to pump much higher on this announcement, right? Because it's basically like Google raising their hand and saying, hey, Sundar says, hey, Jensen, I've got $85 billion to give you. Just hang tight for another couple quarters and you'll have it, right? So that's basically what's going on there and why the semis are reacting more meaningfully. If you look at the actual breakdown, and you could flip through the deck if you'd like, but here you go, 13% year over year on YouTube ads. So let's see if they can give me that raise, pass along a little bit of that. But in all reality, the search segment is still pretty healthy. Although, yes, there's the antitrust stuff going on in the UK. It's not like this segment is like dwindling so fast. This is not quarter over quarter comparison. Obviously, this is year over year. But it's still at a decent enough pace. And what's most notable as well is the margin is about the same. Right, there's no decline in margin as they continue to scale. So all set on that front. Let's move on over to, let's get back over to the platform and let's take a look through some more supporting evidence charts before we jump into the core list. Let's do it with the bond ratios. No red flags over here until this breaks out over this high. We got pretty close and are backing off now. I don't think that's much of an issue, so it's kind of a lower tier watch for me. Credit spreads continue to drift lower. That's bullish for equities risk appetite. If we look at HYG, nice move in the upward direction. They're not totally on par. Obviously, S&P made a new all-time high today, so they're not totally on par with the SPX, but I do like the fact that these subtle little downtrends here and here have broken and are trying to resolve back up to the equal high. It's at bare minimum not bearish, right? That's the base case so far on that read. If we look into breadth, I was mentioning this over on the tick when we were looking at market internals. Nice upticks here, literally, out of the breadth reading, so not really concerned about the lackluster cumulative build on the ES futures or the NYSE exchange from today's session. If you look at the RSP, you could see it here as well. Nice break on the RSP, brand new all-time high on the equal weight S&P 500, reaffirming what we just talked about with new highs and lows, moving average charts. Same thing here in the equal weight NASDAQ, even though the weighted NASDAQ did not. So all things considered, breadth is really strong out there. A lot of things moving. Let's take a look at volatility. And when I say moving, I just mean higher. Doesn't necessarily mean that, the darlings that we trade typically had decent days. They were all right, but kind of some of the price action intraday has been a little bit, what should we say? Leaves a bit to be desired. It's hard to trust mid-afternoon. Anyways, volatility getting absolutely crushed here. Now that we're through earnings, now that we have the EU trade deal out of the way, very reasonable to see volatility collapse, which of course should drive upside in the market. That's exactly what happened from a mechanics perspective. Same thing here in the VVIX. And if we take a look at volatility futures, nobody should be shocked to see really strong contangos in the top segment. You can see here decent on the 9 versus 30 day, and even a nice little contained move inside of the 1-day VIX. No issues out of this. I would think that the 1-day VIX was maybe pricing a little bit of earnings volatility. I would look very closely to see if this collapses on Thursday into the end of the week for, again, just new lows down here underneath about 750. Let's jump back on over to our core list of companies and rip through this stuff. NVIDIA, look at it in the after hours at 172.70, 172.77. If we take a look at where that is on the chart, it's really right around where my white line is right here. So a little bit of a gap up opportunity tomorrow, which is, I would have preferred an open in range if I'm being completely transparent. Here's the daily bar inside hammer. This would have been a beautiful squeeze opportunity up and over this 170-160 mark. I still think it's in play. Obviously, we're going to have to apply gap rules here. So if we open higher, a pullback to support here, something that looks like this, that would be really lucrative for risk and reward back to the all-time high. If it is a gap and go, I might parse out this little intra balance level around 173. I don't want to get too level happy, but if it is going to go, that's the level, right? So we open here, 172.70s, something that looks like this. Maybe it's a little caution. That's a really tough scalp to take. Your 5 2-minute candles off the open probably won't allow for about $1 move like that. Maybe it's just over the all-time high into blue sky territories is the scalp. Those are the 2 or 3 ways that I really envision NVIDIA coming into play. So gap up, gap fill reversal longs back to here, or this to this, right? 1 and 2, and then this here. If you can catch this one, so be it, but you are technically underneath 170, 160 if that's the case. I would prefer to see that. Okay, if it is going to fade off and just be like, okay, a big nothing burger, not interested. Just not interested in this range. I wouldn't take a short or a long stance if we're in there. The daily trend is still clearly up. I would just be a little bit hesitant saying, okay, we got the thin structure retracement. Why are we just noodling around back inside of it now? Wouldn't really be compelling. Let's go over to the Microsoft chart. It's the Kramer special, own it, don't trade it. I think that's the mantra for Microsoft these days. If you do want to, sort of look for levels and look for trades, that would be the next idea. Overshoot, test the daily 20, support it, higher low over 505.25. Targets the all-time high, basically 513. Let's move into Apple. An okay hold of 213 without a catalyst. This thing's just totally dead in the water. If you want to trade it, be my guest, but it's proven to you how many times that it just sucks as an intraday trader. It sucks as a swing trader. It's going to go one day, and we'll look back at it in hindsight and say, oh, yeah, look at that move. But to actively participate in it, unless you have leaps on this thing, you're setting yourself up for failure. If you're trading weekly options on Apple these days, it's just like pulling teeth. So I would stay away. Amazon, inside candle. I'd like it over the high of Tuesday. Over 229.75 gets interesting. Some kind of Brigade bolt over that. Maybe even to get there becomes kind of a watch as well. We've got 229.85 in the after hours, a little bit higher. 229.85 is right around in here, just sort of around that alert. So either pullbacks to long off of previous day's high or this, right? These 2 ideas are the top priority. 228.50, 229.75. Can we stay above those levels? If so, next target overhead is 233.75. I would not look for Amazon shorts. Amazon daily chart is too strong. The structure beneath us is too solid. Balance, 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 right? I really would not try to short this structure until there's a clean trend change on the daily. Let's take a look at Google earnings. The expected move here for earnings are what you see highlighted in red and green. As of right now, in the after hours, we are trading 193.80 by 83. So that puts us 193.80 by 83 is right around in here. Little bit of a gap up. It's a gap into the gap overhead. It's okay. Google has been another one of these names that if you catch it on the one-off day, it's nice. But if you did catch it on any other day, really junky price action in here and here. I'm honest, I would have been hoping for a much larger move from earnings out of Google to sort of reset the chart, and we're just not getting that. So I have to be a little bit patient here. One of the opportunities could just be a deeper pullback. Let's say we open and fade the gap hard. They sell earnings for whatever reason. If we come into this zone, I'd be open-minded for a potential long. Daily 20 SMA might catch us there. It's pretty steep in terms of its slope right now. The gap up, of course, would just pull it even higher for tomorrow's session. So this is the market maker expected move, and we are not testing the top or bottom as of right now. If you go to the, excuse me, if you go to the hourly chart, extended hours on, you can see, right, there's a decent clip of volatility. You got pretty close to the upper edge, but we're settling out kind of right around in here. Leaves a bit to be desired, if I'm being honest. So I'm still a little hesitant on the whole Google idea. I've not warmed up to the to Google, right? Which is fine. Like if it's going to do this and you know work out over time, that's fine as like a swing trade. But as an intraday operator, it's been just back burner. Let's take a look at Meta, see what's going on with the metaverse. I love the chart setup here. You have a daily uptrend. You sort of triggered this as a daily double top under the neckline. I like the opportunity for the inside bar to go either way, but I'm a little bit partial to the upside, and I'll show you why on the hourly chart. Let me turn off those extended hours for a second. Let's zoom back in. If this is going to be a double bottom and this was simply an overshoot of 705.50, then I really love the opportunity to possibly squeeze out shorts from here over 714.50, which would be a recapture of the neckline from the daily double top anyways. This was the daily double top we just drew. If we're over that level, the daily double top is invalidated to some degree. Not completely, but to some degree, right? So 714.50 gets kind of interesting for this. I would target the top end of this range from back here, 726.75. If this is going to pull back, maybe this is a trade again. I don't know. I would prefer, like if that's going to be a short, I would really prefer it underneath about 703, if I'm being honest. We could put a little bit of a zone down here, 703. 703 will fly. Let's do that. Let's do this. Good. Round numbers only. You guys know the deal up here in the office. So if it's going to be an inside bar breakdown, that's the trade. From A to B, 703, 694 is going to be your B target from this move on Thursday of last week. Let's keep it going. Tesla, let's take a look at let's start on the daily. Just because, like, I think one thing we should remember is that Tesla's really struggled to resolve this, maybe in anticipation of earnings, but unfortunately for Tesla, right, it's gapping down. You can see here, bid-ask spread is 316.30 by 37. That puts us 316s right around in here towards the bottom end of this range. So unfortunately, Tesla, just like Google, is not really doing anything meaningful enough to say like, okay, we get this and like we're going to build out some new structure, or even this and we're going to reject and build out some new structure. It's like just a lot of the same. A lot of the same at the moving averages. Maybe you could say the earnings announcement being disappointing is just kind of like, let's just pick up where we left off and like not do anything with it. I don't know. So I'd be inclined to see where we open up tomorrow. I don't want to speculate too much on whether or not the gap down is going to stick or not, but you know, I just don't, I'm not interested in trading this action here in Tesla, right? It would have been ideal on the hourly chart. You could see this as clear as day. It would have been ideal, like if earnings were a non-issue, to just clear this and try to make this move for the thin structure retracement. Clearly that didn't happen in anticipation of earnings or just otherwise, you know, even good setups can fail if there was no earnings. It doesn't matter what we want to attribute it to, but it just hasn't been trading really well. So in that sense, I don't want to say I'm disappointed in Tesla because it just is what it is, but I don't really think there's much to do if we're just in this junk of price action through here. So moving along, let's take a look at JP Morgan. Breath of fresh air. Finally looks good. Look at this thing. Finally moving in the upward direction, new all-time high. I know Steezy in the group is nice and long GS, right? So all banks, all financials, they look good. They look fantastic, right? Financials look good on this breakout here. You could go over to Morgan Stanley and see something similar. You've got the trend line that hasn't quite broken out yet. You could take a look at WFC was the other one we were looking at today. WFC, excuse me, on the ticker type. There we go. Break here. So financials look good all up, and we know that there's been healthy financial activity. You see a lot of it in the headlines with IPOs, and I suppose Figma is slated to start trading next week. That'll be interesting. Let's take a look at Palantir, moving away from banks, just because they're cool. It's always a good reminder to keep us bullish on the S&P, but is it tradable? For me, unless it's a swing, not really. Palantir, the one that got away today, just didn't quite have the trust in the chart as the broad market was kind of finagling around that key level. But nonetheless, nice day to the upside, back to these all-time highs. Very, very weak reference point, 1, 2, 3, 4 equal highs after a higher low. You can only knock on the door so many times before someone opens up. I'd love to see if we can open it up tomorrow. Over 155.25 is all-time highs on Palantir. I'd love to see it. Let's take it down to the hourly. If we do pull back, this is a 100% retracement, so let's be mindful of that. But if we pull back here, offer a higher low at 152.50, I would fish there as well. Can we go risk reward to the all-time high? Can we go risk reward into blue sky territories? Right, that's really the name of the game on Palantir. If it does drop 152.50 and it comes back to 150.50, not the end of the world. You could still build an argument for a higher low. I would just be a little cautious second go around of this level from back here. Overhead supply maybe starting to get a little bit heavy, right? The daily double top is only an issue when you're underneath 145.50. So I would not be calling for, oh my God, daily's got to back off and like, going to crash and burn. No, 145.50 needs to break if that's going to be a conversation point. Broadcom. What do we see on Broadcom? So this is one of those semi names, obviously moving substantially higher through the overnight. We've got 291.71 by 99. That gives us an all-time high gap up, basically. Here it is with the after hours turned on. Let's take a quick look. There it is. So any pullbacks over 290, I would have to think overnight high becomes a target. Blue sky territories become a target. I would give this the benefit of the doubt down towards 287.85. If we turn that off for just a second, you could see why. Zooming in, if we hold this consolidation over this high, over the opening print from Tuesday, I think you're good. So you got holds of this zone, generally, looking for bulls to carry this forward into blue sky territories. Broadcom, it's going to dethrone NVIDIA. It may have already dethroned NVIDIA in terms of us calling it the one stock to rule them all. Let's move along. Let's talk about AMD. On the spirit or in the spirit of semiconductors, a little bit higher, 161 on the open up here, so 161.10s, low 161s right around in here. Therefore, right, gap fill reversal staying over 159, that's your top priority. If you can go gap fill reversal longs back to the opening print, risk reward, looks pretty good. That's a solid looking trade, especially given the catalyst that we see through Google earnings and the spend on infrastructure, basically upping it to 85 million. If we are going to get continued follow through, beyond that, the major target is 166.65. If we do fall into this range under 159, not really interested. You could see based on today's price action, terrible, absolutely horrible out of AMD. I did want to check Palantir. Yeah, okay. I just wanted to double check the after hours was not moving aggressively, and I was feeding you some non-relevant levels and something of the sort. But it's not moving. I thought it might have maybe made a sympathy move, AI, sphere, semiconductors. Not really. So as of right now, Robinhood's the final on the list. Then we get into 5 additional ideas. Robinhood, I like the hold of this level, and I like the possibility for a Stevie Wonder up and over 102.75. Post-market, it is 102.83 by 89. So if we're going to open above its gap fill reversal and go, 107 is the target. If we open inside and just break, I would probably be willing to throw a couple contracts at Robinhood and just manage the risk of the trade based on total dollar value of the premium purchased. If it goes to 0, that's my stop. Right now, hypothetically, that's the stop. But would I really let it go to 0? Probably not. Probably start stopping out of it somewhere underneath about $100, 75 cents. So that's the idea. Can we get this? 107, thin structure retracement, retest this. Previous resistance acted as support there. That is the level, 102.75. Okay, that's the core list of companies. You might have noticed that Netflix got the boot. Netflix got the boot based on just my own personal trading. I can't remember the last time I even traded Netflix. It's tucked away in the long term somewhere, and that's fine. But in terms of actively trading, it just hasn't been it. So if you missed Netflix, leave me a comment down below. Maybe if there's enough, we'll reinstate it. But for now, we're moving along. Uber is the first idea on the lineup. What do we see? Unfortunately, a little bit of a head and shoulders here developing after what looked like a decent hold opportunity for a higher low. The reason I'm a little concerned about it is the bearish engulfer, right? You opened on a gap up, the broad market went gap fill reversal, ended up here, Uber ended up here at the lows of the neckline. So if it's going to break down under 89.90, I'd just be interested in this gap below. We have 87.90, 85.30. If we come in for a test of that area, I would start thinking about the possibility for a gap fill reversal from that. But for now, in the short term, that could be a possible short, thin structure retracement and a gap underneath us. So 89.90 on Uber could be an idea. I would only trade this big asterisk if the broad market is weak. Let's take a look at the next one. Carvana, CVNA is the ticker on that. And let's go out to a daily chart first. I like the daily because this is a double bottom. This is a neckline. This is a breakout. This is a Brigade bolt. We have back-to-back hammer candles on the daily. Over the daily highs, I would target these highs, and then really the all-time high. So on the hourly chart, you could start to see it, right? You could probably strike a trend line. That's cool if you're into trend line trading. I'm not so much. I prefer the horizontals. But over this, you maybe target the trend line and then go here. That would be this previous pivot high. Then you go here, and you just walk it up, sequential, right? One by one. Risk, reward, ultimately, that's how I look to configure it on the first go-around. And then if you can get this, right? You have risk and reward here to the all-time high at 376.83. That's Carvana. Next up, we've got Coinbase, getting a little bit more familiar with some of these usual suspects. Coinbase, look at the daily hammer. It's got a little bit of work to do, but this is a nice daily pullback, right? It's over the daily 20. It's over this historical level as well at 380. It's also not pegged directly to Bitcoin, like MicroStrategy of the world, right? This has a lot more to do with that tokenization and stablecoin. So if Coinbase is going to go for it and really make this move over the hammer high, that's interesting. But there's an intraday sneaky level at 408. If we crack 408, let's take a look at the hourly. That's really where it opens up. Sorry for the zoom. My fault on the keyboard shortcut. So if we get here, pull back, you could start to see how maybe there's your argument, inverted head and shoulders. Over 408, that's where it's smooth sailing up to here, previous 430 all-time high. And of course, if you wanted to be fully nuanced, it would be around 434 as the ultimate target from these highs back here. Okay, that is Coinbase in the upward direction for a potential long over the hammer high and 408, the sneaky level. If we come in with BA, big shout out to the group. In the group, we were reminded of Boeing. That was fantastic. So if we get this Brigade bolt into the gap overhead, then we are looking for upside. Gap overhead is here, all the way from 234 to 245. If we can get that, it's a nice daily bull flag, possibly a pre-earnings run-up. They are next week, so this week's options, they do fly in terms of, literally, Boeing. Oh, I cracked myself up. It's bad. I got to stop doing that. I can't laugh at my own jokes. If we get this, we're all set, right? There it is. There it is. So earnings a non-issue. I would trade options for it on Friday. I would manage risk via position size, just understanding if it doesn't work out, you might get theta burned if you just go sideways. Okay, so manage risk based on position size. That's Boeing. And I got to go back. I got to go back and I've got to get the actual name. It skips my memory right now. I want to say it's with an E. Where is it? BA. Trent. It's Trent D, not with an E. I was thinking Ernst for some reason, but it was Trent. Trent reminded us of Boeing. So shout out Trent in the group. Let's go on over to Upstart, UPST. Remember the classic TV bit? Oh, Upstart. Can you tell us what they do? AI lending platform. That's all they had to say. AI lending platform. Money, loans. Upstart over these highs. Breaking out. If it pulls back and holds 8130s, this is like a lower tier watch. It's why it's the last name on the list for our additional ideas. But maybe you get a little bit of follow through up towards these 89 highs back here. Slightly cheaper name. It doesn't really trade that well. The options are not fantastic, right? You can see just a handful of volume and open interest at select strikes. So be careful in terms of spreads and volume if you're actually going to trade it. But I did like the beginning stages of the breakout here, possibly holding and then continuing into these range highs. This is pretty thin structure from the breakdown. And at one point, I believe this also had a pretty high short float. So I don't know that the short squeeze is necessarily going to continue or that this is even one in the first place, but the idea still stands. Upstart over 81.32. We're not even going to go round numbers on this. That's how low tier of a watch it is. 81.32, 89.13 is your upper target. All right. That's all I've got for you in today's episode of the Midweek Market Update. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. We will be live tomorrow morning at the 8 o'clock Eastern time frame, as we always are. Remember, tomorrow morning we have jobless claims, and at the 9:45 time frame, 15 minutes into the session, we have the PMIs coming out. So keep your wits about you. We'll give you the pre-market prep. We'll give you the game plan. We'll update you on how the earnings settle out between Google and, of course, Tesla there for the gaps on tomorrow's session. And that'll do it. I think we may or may not have a show on Friday. We have places to be, people to see, music to listen to. So possibly a little pre-recorded pre-market thing. It would have to take place at like 7:30 before we hit the road. So we shall see. I'll keep you posted on X, of course. And if I don't see you, I'll be enjoying some tunes. Hopefully you're enjoying a lovely Friday in the markets. And then we'll reconvene and we'll do it all over again next week. Okay? So with that said, have a green trading week, and I will see you in the next one.